Rajashekhar, you can start now.
Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. The disclaimer for this podcast is that whatever stocks we discuss are intended only for educational purpose, so should not be taken as an investment advice. Let's look into Nifty's daily chart taken from our website to get an overview of the general market direction and what are the levels we are looking at on the index front. You can see Nifty has been under sell-off after making a new all-time high around 18,887 level, and it has been under sell-off and it has fallen more than 1,000 points from that level. During the process, it has breached its key moving averages, starting with the 21 DMA, then 50 DMA, and 100 DMA was also breached recently. If you look closely in the last 2 days action, you can see the selling intensified because the volume was also on the higher side in the last 3 sessions, and the index breached its 100 DMA as well. 100 DMA was a very crucial level for the index. Historically, it has acted as a very good support, but that level was breached recently as well. Until yesterday, we were in rally attempt. We were waiting for the market to give an follow-through day to change the market status to confirm the uptrend. However, in yesterday's session, Nifty breached its recent low, correction low, that is 17,774 level was breached in the yesterday's level during the intraday. Hence, we have changed the market status to downtrend after the end of yesterday's session. However, in the yesterday's session, Nifty closed in the upper half of the trading range. Hence, we have considered it as a day one of attempted rally. So yesterday's low will be very crucial for Nifty going forward. Yesterday's low will be, if the Nifty holds that low for the next 2 sessions, we'll be back to rally attempt. From there again, the methodology says that we need to wait for the follow-through day to change the market status to confirmed uptrend. However, currently market is not looking very strong. You can see global markets are also not doing well. Indian market has also breached its 100 DMA. So next level of support is around its 200 DMA, which is the black line here. So until then, there is no proper support for the index. On the upside, there is a huge supply as well on the index front. You can see this overhead supply can definitely will act as a resistance. So it's very dicey situation for the index. For the index to move upward, it needed lots of buying happening from the large cap stocks, and the leading stocks should break out from their base patterns. And also, the currently earnings season has started with IT companies reporting their numbers. So if the earnings come more than expected, starting with IT companies and then banks and large cap stocks such as Reliance, definitely Nifty will advance higher. However, if the earnings come below average estimates, then definitely we might see further downside for the market. Some of the macroeconomic news which have come out and which will play an important role on the market. India's consumer price inflation has fallen to 5.72%, which is 18 BPS below a consensus estimate of 5.9%. A positive sign on the inflation front. Inflation has been hovering in the higher single digit or in the double digits recently. So also it has come down to targeted range of below 6% by the RBI. So it's a very positive sign on the inflation front. For the last 1 quarter, the inflation has averaged at 6.1% against a forecast of 6.6%. Again, a positive sign on the inflation front. Definitely. Also, RBI in the coming meetings will take this below inflation, lesser inflation than the forecasted as a positive sign, and then the magnitude of rate hikes will come down, and they'll focus more on the growth going forward. Because growth is getting hampered because of higher interest rates across the tenors. India's industrial index of production accelerated to 7.1% for the month of November, whereas for the month of October, the actual IIP declined 4.2%, which was the worst IIP numbers in the last 26 months. Again, a positive sign on the macroeconomic front. Some of the companies will be reporting numbers today. Wipro, a leading IT company, will come out with numbers, and L&T Finance Holdings and Aditya Birla Money, Just are some of the other leading stocks which will be coming out with their numbers today. In the yesterday's session, FIIs have sold on the net basis. They have sold more than 600 crores of equities. This is the 15th session of net selling by the FIIs, which is a not so positive sign. However, domestic investors have been giving support for the market. Yesterday also, they have bought more than 2,100 crores of equities in the Indian market. A leading IT company, Infosys, second largest IT company, has come out with their numbers for the December quarter. Numbers have come strongly, both on revenue and PAT front. They have beat straight estimates. Revenue increased more than 20% year-on-year basis to 38,000 crores. PAT increased 13% again year-on-year basis to 6,500 crores. Some of the key pointers to look out for the in the results are the revenue guidance has increased to 16 to 16.5% range for the financial year FY23, a positive sign, and operating margin has been maintained at guidance for the operating margin maintained at 21 to 22%, again a positive sign. Out of the total revenues, digital revenues continue to increase for the IT companies, especially if you look at Infosys overall revenues. Their digital revenues have come out at nearly 63%. That is almost 2/3 of the overall revenue. And also the digital revenue has grown 21% in the recent quarter. Total contract value, which is a number of orders the company has received during the quarter, came in at $3.3 billion, which is the largest in the last 8 quarters. Again, a positive sign. So there are lots of positives in the company's results. Definitely, we might see good action on the stock front. However, the stock is trading below its key moving averages. We would want the stock to reclaim these moving averages going forward because of on the back of strong results. Again, attrition rate, which has been the highest recently for IT companies, has declined slightly for Infosys at 24.3% for the December quarter, from 27.1% sequentially and 25.5% of attrition rate in the December quarter last financial year. Again, a positive sign on the attrition front as well. Another leading IT company, HCL Technologies, have also come up with their numbers. This company has also given very strong results, both on revenue and PAT front. They have beaten street estimates. Revenue increased nearly 20% year-on-year basis to 26,700 crores. PAT grew 20% year-on-year basis to almost 4,100 crores. TCV, that is total contract value for the company during the quarter, came in at $2.35 billion, which was up nearly 10% YoY basis. Some of the key other pointers to look out for the index for the stock in the results are revenue guidance was maintained at 13.5 to 14% range, whereas EBITDA margin will likely narrow to 18 to 18.5% going forward for the coming for the whole FY23. Attrition rate for the quarter has come down sequentially to 21.7% from 23.8% last quarter. However, if you compare on year-on-year basis, attrition rate increased nearly 200 BPS if you compare by YoY basis. Again, the stock has reported good results. Currently, stock is trading at a key level, that is 50 DMA. We would like to see the stock reclaim that 50 DMA and consolidate further before breaking out from the base pattern. Overnight, US market closed on the higher side, even though the magnitude of gains are not much higher, but a positive sign. If you the closing on the higher side is a very good sign. The global cues are also, Asia markets are also trading on the positive sign, taking cues from US markets. US market closed 0.3 to 0.6%. The three major indices we track. On the Asian markets front, Shanghai and Kospi are trading 0.5 to 0.8% higher, whereas Nikkei is trading 1.2% lower. SGX Nifty is also indicating an higher opening on the index front, almost a 100-point higher opening we might expect on the Nifty front. And we would like the index to reclaim its 100 DMA in the today's session. And going forward, if the yesterday's low is maintained in the today's and tomorrow's session, we'll change the market status to rally attempt. Thanks for joining today's pre-bell. Have a good trading session, and also Team MarketSmith India would like to wish happy Makar Sankranti to all the viewers here.